Have you ever seen someone turn $100 into $1,000 in the market within days, only to lose everything on a single trade? That's the illusion of leverage. Today, we're going to understand how it works and why it breaks so many traders. I'm Chad Vermillion. I'm part of the Zero Markets team. If you've heard about leverage but don't fully grasp the real risk behind it, this video is for you. We'll talk clearly and straight to the point about what leverage is, how it affects your trades, and how you can or shouldn't use it responsibly. Make sure to like, subscribe to Zero Markets channel, and hit the bell to keep receiving content that can truly change the way you trade. To begin, what is leverage in practice? Leverage lets you trade an amount far greater than your account balance. For example, with $1,000 US, you could control a position of $50,000 US or more. This means any market movement is magnified proportionally. It's like driving a car at 200 kilometers per hour. You get there fast, yes, but the risk of crashing and getting hurt also increases exponentially. So, why does leverage attract beginners? Because the promise is tempting. Make a lot with very little capital. And worse, sometimes beginners win their first few trades and think they've mastered the game, but just one mistake can wipe out all their capital. Real example, a 1% move on a 50x leveraged position equals a 50% gain or a 50% loss. Now let's take a look at what most people don't see about leverage. It's not free money. It's an implicit loan. It amplifies mistakes. Without a clear plan, it speeds up your destruction. It affects your emotions. Small swings feel like roller coasters. Stress clouds your clarity. And now, how to use leverage responsibly if you choose to. Number one, understand the asset you're trading. Leverage on the mini index differs from leverage in stocks or crypto. Every asset has its own volatility and value per point. Practical example, on the mini index or the WIN, each point is worth right about 20 cents per contract. If you trade 5 contracts, each point moves $1. A 300-point swing equals $300 of variation. That may seem small, but with leverage, this can consume your margin in minutes. Number two, never trade leveraged without a stop loss. You must limit your loss. Trading leveraged without a stop is like walking a tightrope without a net. Number three, start with low leverage. Just because the platform offers 20x doesn't mean you must use it. Start with 2x or 3x and focus on understanding market movements. For example, if your broker offers 100-to-1 leverage, you can control $10,000 with $100, but a 1% adverse move can wipe out your entire account. Number four, calculate the total risk of your position. Don't just look at position size, but how much of your equity is really at risk. Example, with $2,000 capital and a max risk of 1% per trade or $20, if your stop is 100 points on the mini index or 20 cents per point per contract, the risk per contract is $20. So you can only trade one contract under that risk limit. Number five, maintain emotional control. If you can't handle loss well, leverage will magnify your anxiety, your impulsiveness, and your bad decisions. Example, many people increase their position after a win and act emotionally after a loss, seeking revenge. Leverage acts as an error magnifier. Emotional control must come before leverage. Remember when to avoid leverage completely. If you're just starting out, if you're not consistent with your own capital, if you don't clearly know the risk per trade, if you don't have a tested trading plan. Trading small is smart, not shameful. Leverage is a tool, not a shortcut, and a bad tool becomes a trap. Leverage can accelerate your growth in the market or kick you out in minutes. Before trying to multiply your money, focus on multiplying your knowledge, your discipline, and your awareness. If this video helped you better understand what leverage is and how it can impact your trading journey, please like below, subscribe to Zero Markets channel, and activate the notification bell. Comment below. Have you used leverage? What was your experience? Let's discuss.